Joining me now for more on the path forward for markets from Pasadena, California's Tom Hulick is the CEO of Strategy Asset Managers. Tom, it's great to have you on the show this morning, and we are looking at losses of about 1% for the S&P today. What is driving this action?
Good morning. This is another interesting day because we're kind of at a critical inflection point that's out there. And I think that the losses that everybody sees on the openings for something like today is becoming the new norm. There's so much uncertainty out there right now, especially with the trade talks going on. And there's uncertainty about interest rates. And so I think that causes people to be very, very nervous.
Yeah. So when it comes to interest rates, of course, I think you're alluding to the fact that President Donald Trump has said quite explicitly that he wants a potential Powell replacement ahead of the Federal Reserve, that is, due to high borrowing costs. What does that mean for investors and the lack of stability in the equity market?
Well, I think that sends a message out to, let's just talk about the CEOs of the S&P 500 companies and all the other publicly traded companies, that there's really no way to predict what's out there. So we will see corporate earnings this week that will send a signal, and I think that the corporate earnings are going to remain resilient. I do see the interest rates trending lower, but whatever Trump says right now, it doesn't really make a difference. It's what Jerome Powell does and the actions that it takes, whether it's preemptive or not. I do think that the Fed will eventually modestly cut rates in the next coming months.
So what is your outlook here? We had seen the market bottom at about a 20% drop. Do you think that is a low that could be retested amid this?
You know, we're going to see a lot of volatility, and there's no telling when that's going to turn around. But, you know, here's the big picture that not a lot of people are talking about. This sell-off has priced in extreme pessimism, but not the upside. So the U.S. economic engine is still intact. The consumers are still spending. We see interest rates trajecting in the right direction, coming down. But the leadership out there needs to be set by the earnings, and that's what the most important thing is. I really do think that we are not pricing in what ifs, and the trade talks settle, and the better picture out there for the U.S. economy.
Where do you see opportunity in this market now, Tom, amid the double-digit drop that we see in the major indexes?
We've been positioned defensively, favoring dividend stocks. We like the energy sector, Kinder Morgan. We took a big dividend with Altria Group, and Lockheed Martin seems to be leading the way with a strong defense picture. But, you know, we're not chasing markets right now. We're building portfolios for the clients, being an active manager. But we do watch the data very closely. And beneath the headlines, it's important to remember, you know, we've been here before, and this uncertainty is something that will be eventually resolved. If it drags off for another quarter or two, it's not going to be a surprise. But I do think that the markets are going to take off at the end of the year, and things were going to settle down.
Interesting. So a defensive positioning until then. How are you looking at the international market in terms of some of these other major indexes that are outperforming on an international basis?
We have a global portfolio, and we've been talking to our clients about shifting into more multinational across the board. But once again, as we're uncertain about the interest rate picture temporarily, we're uncertain about the trade talks. So that keeps us in the U.S. pretty closely. We do have exposure overseas in mining, in energy, in technology, but for right now, we are more focused on the U.S. markets.
And Tom, finally here, of course, as we see the tit for tat going on when it comes to trade policy, China overnight saying that it does intend to retaliate if countries work with the U.S. to hurt Beijing. What does that look like?
Well, when you have two leaders of the, one leader of the free world and one other leader going back and forth at each other, I do think that that cooler heads will eventually prevail. It's not good for the global economy, and China's mission, as we know, is to dominate the world. But the United States is clearly the leader out there. We have a right to protect our intellectual property. We have a right to lead the nations as a security provider. We also have a very transparent market and account accounting system. I don't see that over in China at this point. I think that their backs are against the wall, and I do think that the United States will eventually come out as a leader, and the U.S. markets as well as the global markets will continue to go higher.
Yeah. Where do you think interest rates should be? Do you think that they should come down, or do you think that they should remain elevated in the wake of this?
Well, the national debt is something that is the main focus for us, and it would sure help if we were able to reduce interest rates sooner rather than later. I do think that they're trending down. We think that there's going to be a cut by the second quarter, at the end of the second quarter. So let's talk June, July. There could be something preemptive if the markets get a little swirly, and we see a lot of that going on right now. But the big picture is that rates will come down, and we need them to come down. The deficit is too high.
And of course, that is a similar message that we've heard from the Trump administration in this particular environment. Quickly, Tom, Mag 7 companies starting to report earnings this week, Tesla and Alphabet. Anything on your radar as it relates to those two firms?
Yes, I do think that the numbers will surprise investors. I don't think that we're going to see something that's dramatic out there. I do think that the corporate earnings still remain resilient for those two companies in particular, as well as the others that are going to be reporting this week and next week. I think investors are going to be pleasantly surprised, and we're going to see an opportunity to put some money to work. The market's cheap right now in our eyes, and we're taking advantage of it.
Tom, thank you so much for joining all the way from Pasadena. That's Tom Hulick. He's the CEO of Strategy Asset Managers.
Have a nice week.
Thank you. You too.